Hello guys, glad to have you on board again tonight. Today is going to be a little bit different. We don't usually do that kind of stuff, but I definitely need to go straight forward with you guys in here. You know, I'm a lot implicated in the SPX scenarios for many reasons. First of all, I've got a big exposition to those markets that could put me into a significant drawdown if it triggers invalidation. Therefore, it obviously has some implication with me, and moreover, because I think that this scenario has a very crazy high level of educative potential, because it can teach you some stuff that normally takes years for traders to get to understand. So this is why I wanted you guys to be involved with that scenario, with low leverages, of course, because I told you it's going to require patience, tight money management, and resilience if you ever want to profit from the big short that could happen out of the current prices. The feeling I have today, and I'm going to discuss about that, is really mixed, because today just feels like I've never ever seen anything like that. So we're just gonna sum up the core informations out of what this is, and how we need to react out of this. So first of all, those candles rarely happen. The Chinese has been breaking the lows, confirming the previous day's rejection, who's been triggering a signal plus a confirmation. On the divergence structure, divergence is no longer existing in the cash market. It still exists on the future markets, so it's hard to say which one is going to be the right one. But I also tend to believe that what we have today anyhow is just unexpected kind of trading, in which we make bullish engulfing structure closing at the previous week's high before today's close, obviously, and before having broken down. So it is a problem. It's basically invalidating a bearish signal. Like, this thing has been happening so many times in the US that if it was just the first of a series, I would say, okay, that's no big deal. I mean, being invalidated once isn't a big problem. But being invalidated 5th time in a row, and it's not just getting the bears options to limit their risk and then pushing on the opposite side, it's just proving the bears wrong and really aggressively. That's the worst case scenario, because the market here wants to prove a point. It wants to make a point, and that's the big problem, because the market isn't supposed to do that. First of all, the market is supposed to price in economic news, not to be playing with whoever is trading it. Though I previously warned you that the market was in an emotional state, and that therefore, in order to take rational decision, you might have to suffer some irrationality first. Reason why you needed to be patient, tight money management, to be aware of assessing the potential irrationalities. To me, all of this is irrational. It was already irrational. What we've done last week is even more deeper in irrationality. What we had today is just another fucking step. The question is, how long am I going to handle this? This is the real and actual question I'm really wondering myself. I cannot let go forever and just say, okay, I'm taking this little step of irrationality in there until I just get to lose 30% of my money, which is not nearly going to happen. I'm aware of the risk I'm ready to take. I have previous gains in the pocket regarding the US, which means I'm still trading with previous gains. Therefore, I have some kind of easy way to assess the potential loss that goes along the risk I take. But I'm not going to let myself go forever. This is not how a trader does. So I'll have limitations. The thing is that I teach you that trading is more about adapting to the market conditions than magically forecasting the future. And this is exactly what I'm going to be doing today, assessing the context. To me, the context has changed as we switch to another state of irrationality that I need to be confirmed for many reasons. The first one is that I sent you this link earlier today to warn you about something really concerning, that the knees itself, so the guys who are making the market, the market makers, they just said we've got a problem with the volume weighted breadth measure, which means we do have crazy speed, crazy high speed market moves with low volume supporting it. We're at very high level of price movement regarding the volume supporting those movements. Consider this as like a Bollinger Band for a volume-weighted average, and it means we've gone to crazy high level that rarely happened. The last time it's been happening was God damn it, I'm just trying to read again just to not avoid saying bullshit. Yeah, it was on December 4th. So let's contextualize this. Last time was there, all right? So it's been initiating a sweet bearish move in which I've been taking huge profits, by the way. So the question is, are we emerging a new bullish trend? The thing is that back then we've been digesting for a couple months. Now, have we even digested anything? No. Worse than that, we did have bad news back then supporting the price moving to the downside. Now, do we have good news supporting prices to the upside? Absolutely not. We have nothing. I mean, the Fed's meeting basically gave the worst possible forecast for the economy, but the market just wants to take it like the Fed has it under control. Do they? No, they don't. What they have under control is the economy. In a midterm perspective, they're going to support economy to avoid a recession, but still, the 2% growth is still half what we've been expecting just 6 months from now. So, in 6 months, we've been slashing the expectation by 2. So, how is it going to be regarding the actual profits from the corporations? Do you think they're going to be magically high as we've just cut growth? No, the profits will dampen, and we're supposed to price profit. We're not supposed to price profit 5 years from now. We're supposed to price profit right now or just a few quarters from now. So, big problem, as we do have a strong divergence, and this divergence hasn't been starting now. This divergence is in place since the first Powell meeting in 13th of January, which is a big fucking concern. We shouldn't have such thing. It shouldn't be like that. It's abnormal. It's therefore irrational. But that's what I said. This market is irrational and doesn't surprise me. I'm just surprised to see how crazy fucking far we can go in this irrationality. Now let's switch to the cash market, because I think this is where the actual answers will come out of. In here, first of all, the cash market never broke the previous day's low, and then the candles in here are not necessarily that bearish. They're more likely two hesitating candles, so the market in here kind of takes advantage of the bear's weaknesses. But still, the signal is still there. As you can see, we still have price okay, momentum and sine wave okay, which means the price action we've had today, the algorithms have detected, is not enough to consider this as an invalidation. All right? So, first of all, the signal is still valid. What we have in a technical perspective is acting abnormally, but not enough abnormal to consider this broken up. Secondly, this is the kind of candle that I don't like, because that's what we call a trend candle. We've been opening at the lows and closing at the highs, breaking significant levels in between. Just like that. So what we have in here is just like that, it's just like that, it's just like not that, but that. So how do we take that? I mean, all right, so let's count down how many of those candles we've had in this rally. First one in here, significant, breaking through resistance, opening at the low, closing at the high. So first breakout candle. Goddamn, second breakout candle. Oh, great. Third one, all right. Fourth one, fifth one, and seventh one. I teach you guys that any trend goes along odd numbers. So the fact that I have odd number in here just kind of first rings a bell and tells me how many times we've been trying to break up and succeeded so far. 7 out of 7. We never failed, we never consolidated, we just rose, 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 and rose. So some will say the market is just trending, shut the fuck up. Yes, but the market trends when the economy is performing. The market doesn't trend when the economy is weakening. What it does when the market rises and the economy is weakening is what we call speculative pullbacks. So what we're doing in here is definitely not trending. It's just speculative buying the market, which is pretty significantly dangerous. Now I'm going to add on top of this just a single element. All right? Look at the damn volume. All right? Is this significant volume that we've been trading today? No, it's just an average volume, and if you consider the latest moment since we started going bearish in here, so let's count down the days, all right? It's been We're going to calculate. It's 115 bars. So now let's take a volume average of 115 bars. All right? We're below this average, which means since we started falling like shit, even that consolidation brings an average volume for this period at no, sorry, I'm bullshitting. I don't have the volume levels in here, but let's just pull it down. All right, I cannot pull it even lower than that. Move to new pan above. All right, let's do this. So let's have the volume. The average volume for the average daily volume, all right, for since we picked the market is 2.5 billions a day. All right, today is not even above that. So is today significant in terms of volume? I don't really think it is. Now let's have a look at the previous breakout candle though. This one valid, this one valid, this one valid or close to being valid. At least we were close to the breakout, we were close to the average, all right? This one valid, this one valid. No, this one wasn't valid, but significantly rose from the previous day. But at that point we were contracting this average. And we shouldn't be using nearly this, but let's state that. I mean, in an average volume executed in here, all the first breakouts have been filling at least an average volume or close to an average volume. It also works for this one and this one. How does it do? It doesn't. It really, really doesn't. So what we have in here is a concern. It doesn't make any sense. So now let's contextualize the price action. What's been happening? What prices have we gone to? So the first one, and I will significantly talk about this one because that's the most important. This is where we've made the close, all right? The close for quarterly expiration. It was in here, the 15th of March. This is where we closed the futures expiration, all right? The options expiration out of the quarter. So the four witches, all right? So what we got in here is, as we can see, we've been buying this level instantly. Buying it clearly. This is what we've bought at the open just to break the new highs. The movement has been just a straight line. No consolidation once again. Started the day in here, just a few pullback, less than 20% pullback, so it's not even a pullback. I told you that I teach you guys that a pullback is at least 23.6 retracement. We didn't even nearly done that in here. It's just, we're not hesitating. This movement is just so strong. That's the problem. Once again, strong, but without volume. And I would stand to suggest, what is it even that we're breaking? We're not even breaking something actually. We're just breaking the previous day's high. And we do break this with a pretty significant divergence. So take that as an hourly chart. Pretty significant divergence regarding the previous stop, so we're losing steam, but therefore today feels like so strong. And this is where, to me, there is a strong divergence between the emotions this market has been inducing today and the actual reality, the technical reality that suggests, yes, we might have broken a little bit on top of the previous day's highs. It's been rising quite a concerns about what this means. But once again, what this means, we don't give a shit about that. What we care about is this the kind of risk that needs to trigger an action? To me, the answer is no. That doesn't mean I'm not going to trigger an action later, but today is not enough to pick a decision. Because what I see today is just emotion-driven movements that just didn't do anything significant in a technical perspective. Because we didn't have volume, even though the knees has been rising concerns about how fast the price moved without volume, it's been confirmed by the close. The closing volume is pretty significantly lower than an average breakout candle. So what I have in front of me is just another freaking set of crazy stupidness going further away. Does that mean I need to surrender a 1.5 month scenario invalidation to this? I think the answer is no. I'm going to need more information, even if that means that I'm going to risk probably 2% loss, additional loss for this purpose. But I'm going to move my stop back to 28.80 like it was back then, because I think the current volatility suggests more cautiousness. Now, why this level? Why 28.80? And to be honest, if we do handle like 4-hour candle closer on top on 28.74, I already cancel my scenario. But I'm going to give you anything I will set as a risk trigger, and I'll tell you as well anything I'll set as a risk invalidation. Because to be honest, I'm going to show something really concerning in here, which is correlation. We've seen few volume concerns highlighted by the knees, and final explanation is going to be this one. Just have a look at the VIX. All right, VIX session today. Have we made a new low? Significantly, we've gone low, just as the price have been. But did we make new low, like the prices have made new high? Definitely not, and we not nearly even got there. We failed on this support and rose at the end of the day with a fucking signal in a context. So to me, volatility is going to rise. There is some short-term perspective in which you can have rising volatility and rising prices, but not in the context we have right now, in which we have crazy high level of uncertainty surrounding the market. Generally, uncertainty comes up with volatility, but volatility comes with both sides. It's a two-sided sword. You don't have just bullish volatility without the replicate bearish one. So what I tend to see is that we're volatile, yes, because we're emotional. What if tomorrow goes emotional the opposite way? What if tomorrow just invalidates what's happened today? What if tomorrow is bearish volatile? What would that trigger an exit today just because we broke to levels that I said I would invalidate down to? Yes, I said I would, but the context always matters because that's my fucking job, to assess the context and the underlying risks therefore. I'm not here to just trigger a stop because I put a damn horizontal level to this price. That's not how I trade. And I'll never do as well. I never do like that. So I need to assess the risk, and what I see today is just a crazy fucking low volume, emotional session, not followed through by the correlated assets, nor the junk bonds have been making new highs today. So it really is a concern. This is not today, this is yesterday. So yesterday, and we've just been dying in between with the junk bonds. And we're in resistant context in here, and we've been closing below that context. So it's not a good sign. Definitely not. So what I would tend to say is that this is an exhaustion move that's gone there to trigger stop losses. We're not following through with the VIX. We have freaking crazy low volume. Even the knees is rising concern about how prices have been moving today. And this session has been driving the highest level of questioning among the traders community. So pretty damn good job to whoever has been driving that market. And I'm not a conspirationist. It's not just one person behind a desk. I think it's most likely just a freaking bunch of computers who's been deciding to follow the momentum. And as the others have been buying, they said, oh shit, I don't know what's happened, but I don't give a shit. I'm buying as well. I think this is what's been happening. All those assets like Apple's, Google, or not Google's, but the Amazon and all those things, those big names really hardly weighting in the indices, they all been pulled back into resistance level. So they haven't broke anything, they're just pulling back to resistance. It's moreover adding to this thing that what we've done just makes absolutely no sense and definitely not the kind of trades in which I want to trigger my losses. So I'm aware that I'm taking a little bit more risk. I'm doing it with previous gains, obviously. And the risk remains boundaries. I'm not going full all in without no limit. I'm just accepting to lose an additional potential 2 to 3%. And let's be honest, let's be straight with you guys. I may just lose a 14 to 15 to 17% in this thing. Yes, it is a significant drawdown, but let me be clear in here. If you've seen a trader never having 15% drawdown in its trading, then it is not trader. It happens to everyone. It's just very rare events. What we have in here, I've never seen anything close to this in my 8 to 10 year career. So what I have in here, I've never seen any such stupid trading lasting so long and going so fucking high in irrationality without the trend following. I mean, I've seen pretty damn greed and bullishness in my past years, but we do have fundamentals following through. We don't have nearly half of it today, which is a concern. And even in the past, I've never seen such greed, such low level of breathing and pullbacking. So it's like we're going straight line, like we know what's going to happen, as we don't even know a bit. Let's be honest, no one knows, and the level of uncertainty and economic surprise is as low as it has ever been. So it's not as low, but it's pretty significantly low. So we're very much surprised by what happens in the market, but the market prices kind of reflect like we know. So there is a problem out there, and I think this problem is going to end very badly. Reason why I remain bearish. So I'm going to wait for today's confirmation. That's going to be the final part of this video because I don't want this one to last an hour. But I had a significant amount of things to say anyway. So what I'm going to forecast and what's going to be my risk management in the next following days. So like I said, 2880 is going to be my absolute limit. I'm not going to go further than that. For what reason? I'm going to just zoom in to give you the technical suggesting this. First of all, last time we've been crazy fucking irrational in this area. This is where we've gone back to reality. All right. So in here, we were crazy, like flying in the sky. The sky is the only limit until something ugly happened. So last time we've been trading this area was pretty fucking stupid. Same thing goes in here, but we generally don't fail 2 times on the same level. So in here was obviously, okay, we're there, so let's fuck it up and see how high we can go on top of this. We just bursted a bit out of it and just got another freaking volatile answer out of it. So now we're testing what we've been testing early January 2018. Remember just how it ended. Remember what I've done earlier? I just said, okay, these are the 2 days that just absolutely makes no sense. This is the highest close we've been doing before going irrationally exhausting. So I said this is probably in this area that we're going to have the bearish reaction, because that's where rationality has been put back in this crazy fucking irrationality. Apparently, I'm not. So we're going to go a little bit further to the next step. So we're going to trade this area, where obviously the answer afterwards have been pretty fucking horrific. So let's see if we're going to do something similar. So I'm going to put my stop loss in here, just a bit on top of it. I'm going to use this, all right? I'm going to use this gap. So this is the limit I'm going to put myself up to. And it's probably adding 3% loss to my current expected loss. So it's not that big of a difference, and I'm ready to take that risk. So this is stop loss at the market. We go there, I'm freakingly out, and I'm not even questioning anything. That won't make any fucking sense to me. I will be pretty pissed at myself taking that loss because I don't nearly think the market is bullish, but I'll have to do it because of risk management. All right? Now, final question, all right? How and why and how could this look like, or what if tomorrow is kind of questioning what we've done today, which I think is at least necessary, and what kind of answer to that questioning would it look like? So let's go back intraday charts, and I'm going to give you technicals, all right? So in the intraday, this feels like pretty fucking dumb to me, and though we could still see 5 waves, 1, 2, 3, 4, 5. We can only see this in the cash because remember the future has been making new dips in here, all right? So it's irrational. I'm not even trying to make sense out of it because those who've been taking part of it, I think, are not really rational decision makers. So, or even though it doesn't make sense to me, I'm not trying to rationalize this. Do we have a signal at the market top? Is a good question. I don't even know. It's just informations I'll need to have. So please give me a momentum. All right, divergent signal in here. All right, so that's not that good. So we're diverging. We definitely are. We can see this through prices. We can go a little bit higher tomorrow and be necessarily stunned by this. We're trading the resistant context, obviously, so it's not time to buy. The only buying entries you could make in these areas are stop loss, maximum loss, stop loss, all right? What it is we surprise, like I said, is the futures contract expiration. So I would like us to break this down by next week, all right? Which means I would like an indecision week to come. Not that kind of week in which we just crazy rapidly bought and not even questioning anything. I would accept a week that closes on top of the previous week's high, but I would like a close that closes at least close to 50% of this candle, showing that the bears are here. I need the bears to show some strength tomorrow. If they don't, just means they're here watching for how crazy far we can go and I don't want to go further away. I can't, simply. It's not that I don't want to. I would like to put my stop losses further away, but I'm not able to. There is a limit to every trade, all right? So anything in here, let's go back 15 minutes, all right, is I would like this. This is regarding the current top, okay? And we could, like I said, make a little higher top tomorrow. I wouldn't necessarily be surprised if this happens, so adjust this level accordingly. Right now, without new top, this 50% area is 28.36. We can also see that this is a freaking breakout area in which we've got significant low volume. So if we could close below this 50%, it's going to be a huge bearish signal for me. For next week, to be confirmed, obviously, but probably next week is going to be crazy bearish afterwards. But I don't nearly think it's going to happen. The market will kind of probably sustain a level of indecision to just maintain mystery for the overweek sessions, for the overweek. So I think we could just get to close near this price. What I would like is to close below this, which is 28.43, but to close as close as possible to the 28.36. And even better, below. If we do close below, that's so fucking great. All right? That will mean the other session, the Fed session, in which we've been gapping up, the pre-Fed session, all right? This level, which is really key element as well. If we can close down this price, it's really important. This is the POC, which means on this session, this is the most traded volume area, the most traded price, 28.43.5, all right? So I want the market to reject and close below this price. That's an absolute necessity. I think this price is going to be tested by tomorrow, and I'm questioning how the price will react. Either they will buy and make new dip, make new high, and then I want them to fall by the end of the session. That's what I would like to see, something like that, okay, and closing something close to this. But we'll still have hesitation for the week. If we can just dip a little bit during the session below the 28.36, that will be great. Even if we don't hold closes in there and just go pricing this area, it would be a good sign that at least the bulls are not really supporting what they've been doing today. I would like to see this. Yesterday was volatile without the VIX following as well. So I would like to see volatile session tomorrow, and absolutely not that. I don't want to see a dying session, just nothing happens on this Wednesdays. We're going to close at the highs. If this happens, I'll definitely close half of my position instantly to don't be fully exposed for the overweek. All right? I'm not necessarily going to close the entire position, but if we do close the week at the highs, I will obviously close half my position at least. And depending on the close we have. If we obviously get the close in here, I'm definitely 100% out. All right, so tomorrow is another day. I'll definitely make you another video if I do trigger my stop losses. I'm not going to lie to you. I'm not going to hide it. I said I will go fully transparent on this scenario because I think it has a crazy high level of educational purposes, and therefore this is why I wanted you guys to be involved in this scenario, because it may teach you very tough lessons in trading. The one I thought it would be teaching you is patience and resilience and money management. Maybe if I end up being proven wrong, and this may happen, I was ready for it, if it comes up, then maybe the lesson will be to teach you how to get out when you've been proven wrong. I tried to fight for very long, and I think I've done a pretty damn good job. I mean, now my average price on the SPX is there. The thing is that I have no more room to rise this, so I can't do any more than that. I've tried my best. If the market took me down and take me down in the following days, I'll surrender because I have no choice. This is the risk limitation problem, and it always is ugly to take that kind of losses, but if you avoid trading them, you're never ever going to be a trader, because that's part of the job. Being proven wrong, even if this is how irrational it could be, then you have nothing to do with it. You just take that loss and move on. All right? So that's it for today. I'm not going to go any further. It's half an hour and it's pretty longer than was expected. So take those level in accountants for tomorrow, and I'll obviously make another video by tomorrow end of the day to just have and talk about the weekly candle closes. All right? Bye guys, be safe, don't be over emotional. That's exactly what that kind of trading is trying to trigger. So if you fall down those traps, I think this is the most dangerous problem to be. We'll see if this was just emotional by tomorrow, depending on how the session will trade, and I'll be able to give you more information. But today doesn't count. I mean, today low volume, problem with the pricing with knees. So I would say no, there is definitely a problem with today's session. I don't want to take early decisions and very important decisions just out of those, I think, irreliable informations. I need tomorrow confirmation. Bye guys.